Okay, let's start. This is my, I don't think I'm going to upload this video, but it's going to be my trading strategy. And let's start from a blank page, right? Start from a black page, and we're going to use this tool. So, you know, this is textbook style. Market goes up, come down for an uptrend, right? And then you have to buy low. Okay, so, but then here's how market actually moves. You can see something like this. Right, so market can actually move like this. This is how market really moves, not this textbook way of moving. Okay, so the strategy is simple. I use 3 time frames: 4 hours, 1 hour, and 15 minutes. Those are the 3 time frames I use. 4 hours is to know the direction of the market. 1 hour is for structure. 15 minutes is for candlestick pattern. Right, okay, so now let's um, analyze this pair I took. This one. Okay, this is 4 hours. So this trade, remove this trade, and also this trade. Okay, this is where I saw the market after this breakout structure. This is the 4 hours. 4 hours is for direction. You mark your 4 hours direction, and market going to pull back. And as you can see, market give this structural liquidity here. That is, we have to take out. This is our structural liquidity. And then so below here, anywhere below here is our point of interest. From here like this, market could have given anything, because after the, I was not really sure of the point of interest because here is really messy, but as long as it has taken out inducement, structural liquidity is bound to change. So once it broke here, I was monitoring the chart. Now this is for the direction when the market is going up. This is not for entries and the rest. Now structure, we go to 1 hour. Okay, let's load. Yeah, we go to 1 hour to see the structure. Market is coming down. We're looking for a change of structure in the H1. So market got here, we saw down structure, break of structure, and then this was where the change of character happened. This is showing that okay, market is about to pull back up, and the market will drop down to give us an entry. So this was how I took this trade. And then after the H1 change structure, obviously market will pull back, and it will pull back. I went to the 15 minutes time frame to look for candlestick pattern. Where is this? It has unload. Alright, so okay, so for this trade, we are actually entered was here because I missed this one. This break of structure going back down this at the close of this candle, because this bullish candle engulfed this one. I entered here. Stop loss over here below this place, and take profit way up, so there was no drawdown. So the plan is 4 hours direction, guess where the market is going to, and then the H1 is structure, how is the market going, right? And then once extra H1 has given you the point of interest, that place is where you enter in the 15 minutes time frame for a more tighter stop loss. Now let's analyze the current market. This is for volatility 10. the overall market is down, is coming down. The market at resistance, right? So that is the downtrend is the trend is down, is bearish. So we go to the 1 hour for structure. Structure H1 was in the uptrend before, and now it has switched structure. And for my analysis, this is our structural inducement. The structural inducement is the structure that happens within the trading range, within the range before the break of structure or change of character. That's called structural liquidity. So after the break of structure, this is confirming that market is going to push back down. So we have all here for a point of interest. Now I'm not really sure of the point of interest that is going to happen, that's going to give, but it will have to close above this place. It has to go above here. So I am going to use FIB. Market was 6180. So I'm expecting a candlestick pattern within this range. Because the person is already above the structural liquidity, the inducement. So this is the range I'm looking for this market to be in. That's for that one. And then the next pair is what, 25. This market is bearish also. Market is bearish, like as you can see. I've already put my Fibonacci, and here is our inducement. Since there was no structural liquidity inside the movement, the first pullback inside the recent hour inducement. So this is the inducement. Here's our inducement. As you can see, it has taken out the liquidity here. And so since the market is bearish, we go to H1 for structure. Right now, H1 is still bullish. We have to wait for an alignment. As you can see, I set an alert here. So the market is about to cross our move to plan my next move. So right now the market is still bullish. Though it has taken structure, taken out liquidity, I'm expecting it to go back up, but if it doesn't, I'm still up for the trade because of the liquidity taken. So the trading plan is 4 hours, 1 hour, 15 minutes. And what we are looking at in the market is break of structure first or change of character. The next step is for liquidity. We are to not miss this liquidity. Should not be missed. Next step, liquidity. After liquidity, I'll be taking the nice go for your own choose your candlestick pattern. That's for H versus 25. Then volatility 50. Let's look at 4 hours. And as you can see, before obviously has been in downtrend. Yes, market has been in a downtrend since. So we are going to take trades on in this direction, and the immediate trend is also down. So I thought there was no structural liquidity here in the market, just this money zone. So it's not look for inducement. Now the first pull after the market structure is inducement. So here I took here as my inducement, and then here after your inducement of structural liquidity, the next point of interest is your POR, is the one likely to hold. So as you can see, I didn't mark I didn't highlight this 50 because I'm not really sure of this trade, but this way I'm still looking at. Then what it is 75 is not clear. 75 is not clear also. Since the H4 is not really giving me clear direction, I go to daily. This is the only time I go to daily to see a clear movement. Now from what I'm seeing, the market cleared was being a downtrend, and is at a very significant resistance. So H4. Yeah, as 25 is not really clear for me. V100, yes, V100 has been a downtrend as you can see. So I'm looking to, I took this as my inducement, my liquidity inducement, and I use FIB. Here is the FIB. I think there's our FIB zone that I used, and I'm going to 1 hour for structure. Now 1 hour is giving me higher high and higher lows. I mean, we're in a bearish market, so if your market to close below this low, pull back and then sell. That's what I'm looking for in the TT100. Jump 25. Oh, I should have highlighted this one also. Jump 25 is in a downtrend. This is the resistance, the order block. Here, the market was a structural liquidity, a structure before the break of structure. This is the actual break of structure is here. This is structural liquidity. Now, market has taken out liquidity. Market has taken out liquidity. The market is bearish. You go to look for structure in the H1. Now, the H1 is also bullish. This place I mark here is the change of structure. Market to close below it has changed structure. When market close below, there's an alert to let me know that market is passing this line. So market pass, I'll look at it. Let me highlight this because this is a good one. Jump 50. Alright, so market has been in an uptrend. It is that I'm not even sure of this one because market broke structure here in the H4, but I'm not really sure of this market though. I'm just going to observe it. Market can give us structural liquidity here and a break of structure and inducement. So it, now like this, now that I've given us structural liquidity and inducement, I'm not really sure what I'm going to expect, but I think you have to take out this one. Maybe if you take out the one, you do not have to take out this structural liquidity. So let's just see how this one plays out. So what we are doing is where's my text? What we are doing is H4, H1, and M15. Right? These are the time frames we use, and H4 is for direction. And also point of interest. H1 is for structure that is in line with the direction, and then also mark entry PUI. Now M15 is for candlestick pattern as your entry. Like the concept I'm talking about, you see morning star, evening star, and engulfing candle. That's for our distance. This is for the H4, H15. And then the rule is also following that is a break of structure or change of character first, then you now go to liquidity or inducement, and lastly is your entry. That's it. This is it. This is just the part. This is the trading plan. Just follow this.